It's Brian Preston, the money guy.
Zeitler has a question. He says, I am interested in becoming a client in the somewhat distant future, but he's looking ahead to that. He says, how do you guys make your money? A free handout told me to ask this question, which I loved.
Clever. Brian, why don't you talk about a little bit, we'll talk about when you hire a financial advisor, there's really two distinct business models, right? Well, I think let's talk a little about the business model, then we can talk about where we fall and why we fall in there.
Yeah, I mean, there's two business models. There's commission-based, and then there's fee-only.
Yep.
Well, I guess there's three.
There's kind of
fee-based.
There.
It's the gray. It sits right in between commission and fee-only is the fee-based. That's your wrap accounts and other things like that. So commission, let's start with that. Commission means, and that's where your life insurance agents, your brokers, where every dollar that you invest, they're just basically getting a front-end commission off the front end. It's not uncommon, like life insurance, whether you're talking about term, permanent, a lot of times the first year premium
might be their commission.
The majority of that is going to be their commission. So you can kind of really get a caliber of what that is on mutual fund sales and stuff like that. If it's just straight up commission, it's going to probably be like a 3 to 5% commission, because one of the bigger commission mutual fund companies, I think their A shares is around 5.75%.
Yep.
And then you've got fee-based and fee-only, where a lot of that is what's called assets under management, where you'll see typically a fee around 1% per year that is charged. And then fee-only can also have subscription as well as hourly models.
Flat fee.
I think before I kind of get into the nuances of fee-only, it's important to share, though, that when we go and talk to universities and others about this, the unicorns of the industry are the fee only.
Sure.
I mean, when last time I did the research on this could have changed, because it's probably been 2 years since I did this, because the pandemic kind of shut down us going to those capstone classes and so forth. But it was what, 2.5%?
Where 3 was the number I had in my head.
2.5 to 3% of the entire financial industry is fee only. The other 97% has some sales component and commission component to it, because the fee based might look like the fee only because they're just doing a wrap account at the around the 1% mark, but then they also can still sell you life insurance and other things that have full commissions. There's different disclosures and structures, but fee only, that's the hourly advisors, that's the subscription model, and as well as the assets under management. We do work assets under management, and I'm pretty unapologetic about it, because what I have found is that the financial world changes so dynamically, so quickly, that I could do a one-time plan for you, but I'm not so sure that plan would be great for you 7 months in the future. Because, I mean, think about what's going on in this market downturn right now, where currency exchange rates have changed dramatically. When's the last time you heard that the dollar was sitting at equilibrium, or even more power, more strength than what the euro is doing? I mean, it is. So that has a huge impact on a part of that. Also, the difference between different asset classes, all that changes constantly, and you have to have your hand on it. Look, it is true. The core of your investment is probably going to be index funds. We tell you that's great on the part of the abundance cycle with learn, apply, grow. I want you to do that to build wealth. We do that for our own assets. We do that for our client assets. We love index funds, but there will come a point in your life where simplicity that you crave is actually running from you because of your success. It's just, you don't even have to look for it. It's just going to happen. I look at my tax return every year and I go, dadgummit, Brian, how did you get so complex with all the K1s, all the different things that are flowing through? And I think a lot of you financial mutants, you have the exact same thing, is that I can load you up in your 20s and 30s with all the things where you don't need to hire anybody, but then you're going to get to close to your 40s or even late 30s, and you'll be like, Brian's right. We got daggum complex without even trying to, just because our financial success has created all of this that's going on, because it's the financial planning that I find, because asset allocation is very important, but that's not where it ends. I mean, we review tax returns every year. Yep. I mean, we do retirement plans. I mean, I've got some executives for some of these public companies that are, if you're in the technology space, there is all kind of restructuring going on. We had an all hands on deck meeting last week, We're having an all hands on deck meeting next week because this client needs to know right now, what are my financial options, because things are moving and they're changing very quickly at this company I'm at. And we're working through that. And you can't tell me that client who's been with me now for, probably 12, 14 years, right now they're going, man, I am so glad that I have somebody who on an ongoing basis can have as many meetings as they can to figure out, what does the next chapter of my life look like? Can I go to this other company? Can I actually retire right now? That type of stuff, it just happens automatically as part of the way the financial world changes.
Yeah, and an important thing to note is when selecting a financial advisor, all financial advisors have conflicts of interest. Whether you're working with a commission salesperson or whether you're working with someone who's fee only, there are conflicts. And just because someone is in one model doesn't mean that they're not a good financial advisor. Don't mishear us on that, or doesn't even mean that you shouldn't work with them. The reason that we've landed on this side of the camp, and the reason why we're fee only advisors, the reason why we work on assets under management, is we wanted to give the highest probability of being able to remove those conflicts. We can disclose them up front, talk to our clients about where our conflicts exist. Like, hey, if you pay off your mortgage, we're going to make less money, but guess what? We still think you should. Or hey, if you don't pay off your mortgage, we're going to make more money. And by the way, we think you shouldn't, and here's why. And we put all of that out there on the front end. So what you want to make sure is whoever you work with, you understand where their conflicts are, and you understand that you're comfortable with them, and you understand what they do, because not all financial advisors provide the same services. Some are strictly investment managers. Some take a more holistic view, looking at tax returns and insurance and estate planning and those pieces of your financial puzzle. So make sure you understand what it is you're getting when you work with an advisor.
Wouldn't it be great if somebody put together a group of questions to ask a financial advisor to kind of figure out where they fall with things? So what I would share with you, go to moneyguy.com/resources. We actually have created a resource. Go ask the financial advisors that you're interviewing these questions to kind of get understanding. How do they make money? How do they get paid? Where are their conflicts of interest, just like Bo disclosed? And so you kind of know what you're getting into on the front end. It really will create some pretty dynamic conversations and really help you know where you stand.